There is a lot of money to be made in the options market. Profit percentages in the triple and even four digits are fairly common depending on the stock you're in. For example, if you haven't already watched this video of mine, I basically show you and give you the rundown of how I was able to turn $2,500 into $18,000 with one option trade. So, with all this money to be made in the options market, where does one begin to learn everything that they need to know about options trading? Well, hopefully right here. Now, this video is going to be covering the very bare basics, like you know very little about options, if anything at all. If you already know a little bit about options and you're like, yeah, I'd like to learn more, my channel is going to be the place for you. Feel free to stick around and subscribe. So as I mentioned, this video is going to be covering the bare bones basics about options, starting off with what the heck is an option. Technically, an option, as the name suggests, it allows you to buy what's known as a contract. And that contract then gives you the option, and that's where the name comes in, to purchase 100 shares of whichever stock you are buying the contract for. So if I was to buy one contract of Apple at a certain strike price, at a certain expiration date, which I'll get to, then theoretically, I have the option to buy 100 shares of Apple if certain things go right. And when it comes to options, you have one of two things. You have a call option and you have a put option. And if you were to buy a call option, that means that you are expecting the stock to go up. And if you are buying a put option, you are expecting the stock to go down. And not only can you buy them, but you can also sell them depending on your account. However, we're not really going to get into that too much in this video because this is just bare basics, but just know that when you buy a call option stock, you want it to go up, and if you buy a put option, you want the stock to go down. Bare basics. Call up, put down. Yeah. Next up, we have these things that are called expiration dates, which happen every single Friday. Now, for those of you that aren't aware, options can expire worthless. They have a lifespan, if you will. So if you were to buy 100 shares of Apple, right, just Apple stock, in like 50 years from now, assuming everything is still normal and Apple is still a company, you will still have those 50 shares. You will never lose those shares. Options are a little bit different. Basically, you buy the option contract knowing the exact date that it is going to die and potentially become worthless. And there are specific strategies involved when choosing expiration dates, which I will touch on a little bit in this video, as well as future videos. So if that interests you, again, subscribing might not hurt. So as you can see on the screen right now, we are in Thinkorswim, which is definitely a more advanced platform and for viewing not only options but stocks. But don't worry, I will show you exactly what this looks like on Robinhood, because Robinhood options and Thinkorswim options look very different, but they are literally showing you the exact same thing in a different format. So at the moment, currently, we are looking at Apple and we are looking at what's called an option chain. You have multiple expiration dates, as you can see here. So as you can see, they happen every single Friday. For beginners, however, the expiration date that you're going to want to lean on and look forward to is it's technically the third Friday of every month is when the most popular expiration date happens. You can see that there are these yellow ones that have weeklies next to it. Basically, that just means that these are not the primary expiration date for that month. And you can see that the 16th of April is the primary, 21st. You can still trade these weeklies, but what you will find out in a little bit is that options don't have the volume that stocks have. And so if you are in a stock that doesn't have a whole lot of volume in the options market, you might not be able to get out or get in as easily as you would like. We are looking at the option chain, and let's just go down to June 18th, and let's just take a peek at that. So these are all of the options that you can trade on Apple at the moment. Now, obviously, there's a lot of them because at the moment, I currently have it showing all of the strike prices. If this is a little bit overwhelming, which it might be, you can turn it down to 14 and bada boom, bada bing. It looks a little bit less confusing and less daunting. You can see right here in the middle, these are our expiration date, which we already know. We are aware that this is the 18th of June, 2021. And then over here on the right-hand side is what's known as the strike price, which is basically the price that you would be agreeing to buy or sell 100 shares, depending on if you bought a call or a put. So at the moment, and granted this is being filmed on the weekend, Apple's price is $121.21. So let's say that I think Apple is going to go up by June 18th. So that's what? Because it's like mid-March. That's like 2 months right now. So let's say that I think Apple is going to be at or above $125 by June 18th. You have these things called bid and ask. Much like in the stock market, there is a spread, if you will. However, you don't really see it in the stock market because there's so many people trading shares. In the options market, however, there is a little bit more leniency, which is what's known as the spread between the bid and the ask. So the bid means what somebody is willing to sell that contract for, and then the ask is what the person is willing to buy the contract for. So you think of it like bartering, if you will, within a certain spectrum. So like there isn't just like one set price. Like me and you could buy an option contract, same exact strike price, same exact stock at the exact same time. But if I put in maybe like a lower price, say for this one, like let's say that I put in like 560 and then you put in 565, we both got filled, I technically already have a $5 profit on you. So as you can see, the strike price of $125 is apparently worth $5.63. That is not actually the case. What you technically have to do is multiply that number by 100 because it's giving you the opportunity to buy 100 shares. And what this is known as is called premium. So you wouldn't be paying $5.63 for 100 shares. You would be paying $563 for the opportunity to buy 100 shares. And basically, this is how you make or don't make money, is in this what's known as premium. Because somebody has to sell you this call option. So as soon as you buy this call option, you are giving whoever sold it to you $563. Now, depending on what this contract does in terms of if it goes up or down, will determine if you make money and if the seller makes money. So let's go back to the strike prices for a little bit. So as you can see right here, this is the $125 strike price for Apple. What does this mean? If after June 18th, so basically June 18th so Friday at 4:01 p.m., if Apple is not above 125 shares, this contract will literally be worth $0. If Apple's stock price is above $125, then you have the option to buy 100 shares of Apple at $125. So you're basically buying the stock at a discount. So let's say that by June 18th, Apple stock is at like $130. Well, if you were holding this $125 strike price and you held it through expiration date, you would then have the ability to buy Apple's stock at $125. So that's technically the way that options were designed to be used. However, I don't trade them like this. I trade options like stocks in terms of I buy them, they go up, I make a profit, I sell them to somebody else, and I get out and take my money. I have never once held an option to expiration date, and I have never once exercised that option into 100 shares. Does that make me wrong? No. There are so many different ways to play options, and that's, I think, what is the most fun about them. As I mentioned earlier, options don't always have the same liquidity as an actual stock and its shares. So, for example, you can see right here we have volume and open interest. Basically, the volume means how many contracts were traded that day. Open interest is how many people currently have that option. So obviously in Apple, you will have zero issues with that. So now let's go and take a peek at Robinhood and basically show you where all of this stuff that I just showed you is on Robinhood. So currently we are on Robinhood looking at Apple's option chain. And as you can see, it is laid out very differently. Up here, you have either buy, call, or buy a put, and then you can either sell a call or sell a put. So that's how they were able to make it look visually appealing while still including all of the information that I just showed you. So up here, you can choose your expiration dates. So we're going to stick with the June 18th one because that's the one I showed you guys on Thinkorswim. And if we go up to this 125 strike price, it is showing us the exact same numbers. And if we click on it, that's where all of this stuff is being hidden that was shown on Thinkorswim. So you can see the bid-ask spread at the close on Friday. There were 9 contracts that were attempted to be sold at $5.55, and there were 25 contracts attempted to be bought at $5.70. So this number right here, 563, is basically the middle of the spread. That's like the average. It also shows you the volume right here. It shows you the open interest. And right down here is the Greeks, which I'm not going to get into in this video. If you want to learn about the Greeks, you will have to stick around and stay tuned for a separate video dedicated solely to the Greeks, just because this video is already getting long enough, and those are definitely worthy of having a video dedicated to themselves. And lastly, just know that there are multiple ways to trade options, because not only can you buy a call and a put, but you can also sell a call and a put, which is a little bit confusing. But with those 4 options, you can do a lot of things with them. And I intend to help you out and show you all the different ways that you can do things with options. I hope this video wasn't too long. If you enjoyed it, let me know with a thumbs up, and I will see you guys next video.